Welcome guys, our topic of today will be pullbacks, but in case this is your first time here or is your first time hearing about Forex trading, what you need to practice is a smartphone or a PC. So what you need to do is, now take your smartphone, go to Play Store, search for an application called MetaTrader 5 or 4. In our case, we shall take MetaTrader 5. Install the app, go through the installation process, accept the terms and conditions. The app will automatically open a demo account for you. With the use of practice, the app is easy to navigate. For the case of a PC or a laptop, go to your preferable search engine, in our case Google Chrome. Search for software called MetaTrader 5 or 4. In our case, we shall take MetaTrader 5. Download the software, navigate to your download folder, find the downloaded software, install, go through the installation process, accept the terms and conditions, and the software will automatically open a demo account for you where you can practice. With practice, the software is easy to navigate and use. Now it's up to you to watch as many videos as possible, to read as many articles as possible concerning Forex trading, and experiment everything you learn in the demo account.
Now it's up to you to start researching for FX pair you want to trade. Based on your research, decide if you want to buy or sell.
Backtest every strategy you learn in the demo account. Now let's dive into our main topic of today.
Price movement of any financial market can usually be described as so-called price waves. What I mean is that the market alternates between rising and falling trade waves, also known as bullish and bearish trade waves. When trading pullbacks, traders look for those correction phases and then time trade entry during such phases. The idea is that you want to wait for the price to pull back during a trade to provide you with a better entry price. What I mean is, when the market is moving higher and your anticipation is that the movement will continue, you want to enter a trade for the lowest price possible. Pullbacks help you find such opportunities. The potential reward to risk ratio is higher following such opportunities because the stop loss can be placed very tightly.